Hey guys, I thought I'd screen this Meet Kevin stock, TTD, or Trade Desk Inc. I thought I heard he's a buyer of the stock from one of his videos. I just don't know if the buy was executed or not. We'll be screening the stock to our three metrics to see whether the stock is trading at overvalued, fair, or discounted prices. TTD is currently trading at $75.22 with high price of 114.09. That's 34.07% of the highs. Market cap of 36.47 billion with PE ratio of 272.21. From this PE, the EPS is low, but is it always this low or is it just an anomaly? First metric, we want an EPS multiple lower than 3. It's 972.18. This is because the PE is too high and the EPS is too low. Now we want to know what PEs it should be trading at, and based from this EPS history, I guess the PE has always been this high because of this low EPS here. OSN is shares outstanding. It is increasing. Not good, but sure, maybe it's a growing company. Next metric, we want to pay a dollar or less for 1% of the money they're making. Meaning, we want to pay 1 PE or less for 1% of their margins. This is based on the lowest margin between the net income and free cash flow margins of the current year and the 5 and 10-year average margins. What you see here is revenues deconstructed, the costs and expenses the company uses to make these revenues. The net income here is after tax already, and free cash flow they generate off of those revenues. I'll show you the relationship of the sales. Of these margins, I'd assume a 12, 14, 16 entry PEs for the stock. Revenue growth here is amazing. I can see why he likes the stock. It's a growth stock, at least for now, but based from these numbers, a very speculative one. Well, he's a trader after all. 14.82 times their margins here is the premium you're paying for if you buy the stock at these prices. Don't you think it's too expensive? I don't know. Is it a growth multiple at 14 times? Sure, but really 14 times? Third metric, historical PE. The metric suggests that it's trading at a higher PE now, 9.73 times their historical PEs. In conclusion, the stock is overvalued by these metrics. I don't own the stock. I understand if you pay premium for the stock, but is it 14.82 times? I don't know. I'm not a buyer of this stock at the current prices. Current price is 75.22. My fair value is 5.14. Well, this is when we multiply the current EPS of 0.28 by the lowest margin in my second metric, 18.36. Intrinsic value is 6.21. This is from Guru Focus. My entry PE assumptions, 12, 14, 16. And the prices below is what we get when we multiply the current EPS by this PEs. If we assume 1 EPS, I could be a buyer of the stock at $16, 2 EPS $32, 3 EPS $48. This is overvalued from any angle. At the current price and my high P assumption of 16, it's priced in an EPS of 4.7. This is a growth stock, a speculative growth stock. This is a trader's play, not a value play. If you decide to put money here, you have to understand that it might not be for long term. And you might lose money when it disappoints projected and expected earnings and revenues. A lot of downside from this stock. And the stock has priced in years of growth already. At some point, maybe the fundamentals will match the growth, but I'm not betting on it. So be careful with this stock, especially if your brokers don't offer extended hours trading. Owners of this stock might just dump shares on you. By charts, the stock went crazy from COVID low. Stock split 10 is to 1 in June to pump the stock even more from traders and investors who clearly don't care about valuation. Or maybe, I just don't get it. But, the gains I could make here, I could make from other stocks. Even with the biggest tech stocks like Apple, Microsoft, and Google. You want to know what you're paying for in these companies. Why is it valued this much now after the COVID drop? And compare that to when it was valued before. I wouldn't chase the stock at these prices. I'd even put the stock in my avoid list until their fundamentals catch up to justify the current price. If we look again at their EPS history, it has not even reached 1 EPS, probably because of share dilution as well. I'd understand if you had bought a stock at COVID lows, but if I were you, I'd dump your shares on Kevin and other owners of the stock. Realize your gains, never look back, and, on to the next stock. This three metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price you pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research.